I will need to take some lifestyle chips off the table this bull run. And the model I built for profit taking is based on when my profit is 4x. I take a percentage of my profit. Sound theory. What happens if it doesn't get to 4x? That's why I use time and not price, because price leaves you to make potential bad mistakes. Do time. I think it's better. It just forces you to take some chips off the table. I'm going to use somewhere around the end of the year to take some chips off. And I'm assuming price will be higher by then, and therefore I can take some profits.
The cryptocurrency bull market of 2024 to 2025 is in full swing, characterized by notable fluctuations. It began on a positive note earlier this year with the U.S. Securities and Exchange Commission approving several spot Bitcoin exchange-traded funds. This approval marked a significant turning point not only for Bitcoin, the leading cryptocurrency by market cap, but also for the entire crypto and digital assets sector. The Bitcoin ETFs have attracted tens of billions of dollars in assets, and the SEC is expected to approve several spot Ethereum ETFs by September, which experts predict will also be very successful. However, recent weeks have seen considerable turbulence, prompting speculation about the future of the bull market and crypto asset prices in 2024. Consequently, many investors are questioning the right time to take profits and exit the market before the next crypto winter begins. Raoul Pal, founder and CEO of Real Vision, views profit-taking as a complex issue that requires careful timing to avoid missing what he considers the greatest investment opportunity humanity has ever seen. Pal advocates for a long-term investment horizon in the cryptocurrency industry, riding through both upward rallies and downturns. For those with immediate financial needs, Pal advises using time rather than price expectations as a guide for determining when to start taking profits. During a recent live stream on his YouTube channel, Raoul Pal, the journeyman, the former Goldman Sachs executive, disclosed plans to take some profits later this year after reaching the anticipated banana zone to address personal expenses. For investors without urgent needs, Pal recommends a buy-and-hold strategy, at least until 2030. He believes that by then, the cryptocurrency market, currently valued at $2.3 trillion, could grow exponentially to $100 trillion.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Danny Rogers, what do you recommend withdrawing and reinvesting next crypto winter, or continue to DCA and hold? Danny, I did the DCA and hold, and I was at all-time highs in my P&L much earlier because of it. I think if you take, let's say you've grown your bag from unit 1 to unit 5, and let's say you're a superhero, you get out at the top, you will not invest unit 5 down. What happens if the market doesn't go down 70%? What happens if it goes down 40 this time because of the institutions? And you're stuck, and then the market's going up, and then you put in 1, and then before you know it, you've the whole thing up. It's so easy to screw it up because you're in psychology. So what I really like to do is, if I can, I'll leave it all in. I won't this time because I want to take some lifestyle chips. I've got some things I want to do. But other than that, I'll keep the rest in. I don't know what else I want to buy. And I just think of the sell-offs as a gift. We have to change our heads around sell-off bad. You've got to think sell-off good. Now, that doesn't mean that's for everybody. You should think, what do I need out of this? And I'll take what I can from that. And then I will continue with the rest. If you're 24 years old or whatever, just stay in, for God's sake, and keep buying. I don't think anything changes.
Raoul Pal's buy-and-hold strategy contrasts sharply with Plan B's market timing approach centered around the Bitcoin halving cycles. According to the anonymous analyst and former institutional investor, data suggests that buying Bitcoin 6 months before a halving and selling 18 months after might outperform a simple buy-and-hold strategy. In a Twitter post earlier this year, Plan B highlighted that all significant Bitcoin price increases have coincided with halving events. He noted that if one bought Bitcoin 6 months before each halving and sold 18 months afterward, they would have quadrupled their holdings compared to a buy-and-hold approach. He questioned whether this was a coincidence, or a consistent pattern that might continue. When a Twitter user pointed out the risks of market timing, Plan B responded that his strategy was more about risk and liquidity management than mere market timing. He emphasized the importance of avoiding severe downturns of up to 80% following intense bull markets. In another tweet, Plan B explained that timing the market around halvings is integral to his stock-to-flow model. His simplified model suggests buying 6 months before a halving and selling 18 months after, arguing that this strategy captures the majority of Bitcoin's gains. He added a disclaimer that this is not a recommendation to sell after 18 months but rather an observation of the historical significance of halvings in Bitcoin's price movements. The debate continues on whether it's better to stick through bull and bear markets or attempt to time the markets to maximize gains and minimize losses. Raoul Pal's recent interview with Kevin Foner, host of When Shift Happens, explores these differing strategies. Which approach do you think is superior? Share your thoughts as we delve into Pal's insights from the interview.
Don't leave the space. If you do it for lifestyle. What's really hard, what I've learned is, I've gone through this before because I've been involved in this space for a very long time. I've held through cycles, I've traded cycles, and I figured out if I just held my original bet, which was much smaller, I would have been 5 times better off. If I'd have just added every time we had a bear market and assumed I missed the bear market low by 30 or 40%, I'd make 25 times as much money. So this time around, I added furiously between June and October, in fact, those 2 dates in 2022. And I was at all-time highs in my P&L well before markets were. That's what it means when you compound. Just do that one thing and it'll change your life. But most people can't. They've been taught that the drawdown is a terrible thing. But if you're not going to take the money out and you don't need it for school fees or the house, don't take the money out. The other thing is, let's say you've turned your 10 grand and it's now worth 250 grand. Okay, when you take it out, let's say you're a genius, you get the high, the market falls 90%, you will not put the same amount of money back because you have that mindset that you had with Solana. There's no I go to zero, right? That is so pervasive that you will only put a smaller bet in. You can't do it. And people think they can. Oh, I'll just take my 250 grand and then I'll just buy it at the bottom and I'm going to be the richest person in the world. No, won't happen that way. Yeah. But I've seen the power of this thing. My sister-in-law, she had a 401k and it was in 2020. She's like, what do I do with this? It doesn't go anywhere. And I'm like, just put it all in crypto. She did. And now suddenly she's got a really quite decent sum of money for her. I mean, several times her annual salary now in this. That's amazing. I was speaking to somebody who used to work at Real Vision and she just dropped in, how much money her and her husband had made. I mean, he was a science teacher and they had made really quite a lot of money, in ordinary person terms. I'm like, you can understand why people become obsessed because it belittles everything you've ever done beforehand, all the work you've ever done. And then you start thinking about all of how much work can I do to put money into this bet because it's the best bet of all time.
Raoul Pal's Exponential Age thesis centers on rapid advancements in technology, particularly in robotics and artificial intelligence. He argues that the global debt crisis, compounded by an aging population and declining productivity, cannot be resolved through traditional means. However, Pal sees AI and robotics as transformative forces capable of fundamentally changing the GDP equation by introducing virtually limitless productive units and exponentially boosting productivity. AI will infinitely scale knowledge, while robotics will revolutionize physical labor. Pal believes this surge in productivity will resolve the debt crisis and drive significant GDP growth, preventing a global collapse. By 2030, he predicts the world will be transformed beyond recognition, reshaping our understanding of economics, finance, and investing. Pal urges investors to seize the tremendous opportunities in the cryptocurrency market before this landscape changes entirely by 2030. He emphasizes the potential of the digital asset space regardless of one's investment timeline, whether selling later this year, 18 months after the halving around October 2025, or in 6 years. He suggests that the productivity boost from technological advancements will significantly drive economic growth and prevent global economic collapse. In light of this, investors are encouraged to consider the immense opportunities presented by the digital asset space. Let us know your preferred strategy and share your thoughts on Raoul Pal's interview and Plan B's tweets. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.